If you want to make money trading US30 every single day, then this is the ultimate video for you, because in this video I am going to give you the highest profitable and the most simplest US30 scalping strategy that I have developed over the past 6 years trading US30 along with my forex pairs. Now this strategy, it is the most simplest you will ever learn, and it is specially designed to trade 5-minute time frame. It does not work on any other time frame, so it is highly recommended that only use it on the 5-minute time frame by following the methods I am going to show you in this video. In the first part, I will give you the fundamentals of this strategy, the core basics of this strategy, and then we will see at least 3 trade examples using the strategy that I am going to share with you. So let's dive into today's video and learn what is this scalping strategy and how you can make money trading US30 using this strategy. Now here is what you need to do in order to understand the fundamentals of this strategy or the core basics of this strategy. The first thing, you always need to start your analysis from a 15-minute time frame. So I'm going to type right here. You have to start your analysis with 15-minute time frame. And on your 15-minute time frame, we only need to identify the break of key support and resistance level. So second thing is we need to identify the break of support and resistance on a 15-minute time frame. Once we will find the break of support and resistance on 15-minute time frame, we have to confirm that with the help of 2 indicators. Now we will be using 2 exponential moving average I have already added, but if you want to know about that exponential moving average, you have to go to indicator section and you only need to type EMA and double click on moving average exponential. Once you do that, on your first exponential moving average, you have to put 50 length, which I have already done that. And then on your second exponential moving average, you're going to put 200 length, and you will have to change the color. I changed from purple to orange just so we can identify the difference between 50 exponential moving average and 200 exponential moving average. Now the third part is we have to use 2 exponential moving averages to confirm the break of support and resistance on a 15-minute time frame. Once we follow these 3 steps, the next step is to go down to 5-minute time frame, because we want to identify the trade opportunities. We want to find the trade signal. We want to place our stop loss. We want to place our targets based on the 5-minute time frame once we do our analysis on a 15-minute time frame. So the fourth part is we have to go down to 5-minute time frame to find the trade signal, place our targets, and place our stop loss. Now these are the only 4 steps that we are going to use in order to understand this strategy, in order to find out where we can potentially have a trade signal and how we can make money using this very simple yet highest profitable strategy that I have developed in last 6 years. Now let's see some trade examples using the concepts that I just shared with you. In this highlighted area, we have literally 3 trade opportunities, and all of them were successful trades using this simple method that you're just going to see. So the first part is that we have to be on 15-minute time frame. So we have opened about 15-minute time frame. The second is we need to identify break of support and resistance structure. If we want to sell, that means we need to identify the break of support level. If we want to buy, it means that we need to identify the break of resistance level, which should have created a higher high. So here in this example, in our trade number 1, we have broken this level of support right here, and we created a lower low here. So when we created a lower low and we have broken this support level, it means that on a 15-minute time frame, we have our break of support level. But we have to confirm it by using 2 exponential moving average, 50 EMA and then 200 EMA. How we can confirm it using 2 exponential moving averages? Let me show you. Once there is a break of support or resistance level in our trade number 1, we have broken this support level and created a new lower low. You can see that 50 exponential moving average also crossed below 200 EMA at the same time when we were breaking this support level. So if 50 EMA goes below than 200 EMA, it means that we are in the downtrend, and we have already made a lower low that also confirms that we are in the downtrend. Now let me repeat it one more time so you can understand it better. We broke this support level. This level was holding the market couple of times. We could not make a lower low whenever we tested this level. Every time market went up, but from here when market made a movement, we immediately went down. We created a lower low, and at the same time 50 exponential moving average also went lower than 200 exponential moving average, which confirmed that yes, this break of support level is real. We have actually created a lower low and we are in the downtrend. So that is all what we need to do on a 15-minute time frame. As I said, there are only 3 steps. We start with 15-minute time frame, which we did in this example. Then we find the break of support level in case of sellers, which we have done already. strategy, and we confirmed that using 2 exponential moving average. We also did that. Now let's move on to 5-minute time frame to see how we can trade using this strategy. So we are on a 5-minute time frame and we have this support level that was holding the market previously. We broke it to the downside. 50 exponential moving average also went lower than 200 exponential moving average. So what we need to do, we need to wait for the market to come towards that level, this level of support which we broke and created a lower low. We want the market to make a pullback towards that level. That is the first thing. The second thing is we need to get rid of 200 exponential moving average, because on a 5-minute time frame we are not going to use 200 exponential moving average. We only need to use 50 exponential moving average. So I just removed 200 exponential moving average and now we only have 50 EMA, break of support level to the downside. We have identified that level and we also have a lower low here. So when the market, it creates a pullback towards that level, during that pullback, market should start staying above 50 EMA, so that the people who like to use 50 EMA to confirm whether we are in the downtrend or uptrend, when they will see that yes, we are staying above 50 EMA and on a 5-minute time frame we are making the movement to the upside, they will start thinking that, oh, the buyer's trend have started, and they will immediately start buying again and again and again. And that is what we need, because in order for us to make money, somebody has to lose money. This is how trading works. You cannot sell if there are no buyers in the market, and you cannot buy if there are no sellers in the market. So what happened when the market made a movement to the upside? We went above than our 50 EMA, and that is what we need. We need the market to first go higher than 50 EMA when we will be making a pullback. So market, it starts to go above than our 50 EMA. That's a great thing. When it starts to go above that, we came towards that level of support. We retested it. But it does not mean that we will just immediately start selling. When the market starts to hold higher than 50 EMA, eventually it will cross lower than 50 EMA at some point. But when it will do that, we have to be at this level of support so we can take a trade and make some money. So when after the market made a movement to the upside, sellers came down again. Yes, we did go below than 50 EMA, but it does not mean that we start selling, because we need to be at that level of support which we broke, which is right here. So after that, you can see that market, it made a movement again and it started holding above 50 EMA. A lot of the people were buying from here, from here as well, because 50 EMA is holding the market to the upside, and on a 5-minute time frame we are making higher highs and higher lows. And the small traders who trade the small time frames, they are just buying. They do not know that the overall trend is for the sell side, and we are just patiently waiting for them to turn into a buy so we can sell. So what happened, that when we came towards that level again on a 5-minute time frame, when we came towards that support level which we broke to the downside, we were holding above our 50 EMA again and again and again, and right after that we started to get rejected. We had our first rejection here, but when we came towards that level one more time, we got rejected again, and right after we started to get rejected, look what happened. The market, it also went lower than 50 EMA, and we are at that support level which we broke on a 15-minute time frame. So anywhere we place our trade here, when the market went lower than 50 EMA and we are also at the level of the support which we broke on a 15-minute time frame, anywhere we place our trade here, put our stop loss just above that rejection area right here, and our target at 1.5 risk reward ratio would be a very nice opportunity. Now here is the thing, we only need to target 1.5 reward using this strategy. If you become greedy and you think that, oh, the market is going in our favor, and you extend your take profit, you can do that, but I recommend that moving your profits at 1.5 risk reward ratio and moving your stop loss to break even as well if you want to hold the trade longer. But my personal way of trading is I close either 80% or sometimes 100% of my positions when it reaches 1.5 times my risk. It is as simple as that. Now this example is for the sell side. I want you to understand it even better, and now I am going to give you the buy example right after this trade opportunity. Now let's move back to 15-minute time frame first. So we have our 15-minute time frame, and now we can see that we got a trade opportunity at this level from 5-minute time frame. Obviously we broke this support level to the downside, and when we broke it to the downside on a 5-minute time frame, we have a pullback. We got rejected here and we got rejected here. Now right after we got rejected and made a movement to the downside, we could not go lower than this level, and market, it made a strong movement to the upside. When it made a strong movement to the upside, we broke this level of resistance which were holding the market previously to the downside. When we broke it to the upside, we created a higher high here. Now we have created a higher high. We have broken the strong resistance level to the upside. So we need to confirm it using our two exponential moving average, 50 EMA and 200 EMA. And if we add both our exponential moving average, you can see when we broke it to the upside, 50 EMA after that also went higher than 200 EMA, which confirms that yes, we are in the uptrend. We have created a higher high. We have broken the resistance level. So we will now go back to 5-minute time frame again to find the trade, and we will get rid of our 200 exponential moving average because we want to take a trade based on 50 EMA on 5-minute time frame. Now on 5-minute time frame, this is the resistance level which we broke on a 15-minute time frame, and this is the higher high area. Now we want the market to come towards this level, test it, and at the same time we need it to go lower than 50 EMA so that people will start thinking that it is no longer a buy, instead it is a sell. So that exactly happened. The market, it started to hold lower than 50 EMA. We were making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and every time we were staying lower than 50 EMA. And at the same time, we were also making lower lows and lower highs on a 5-minute time frame. So what happened that at this level, at this strong resistance level on a 5-minute time frame, when we started to get rejected at this level, market initially it was holding lower than our 50 EMA, but after it got rejected couple of times at this level of resistance, look what happened. We got rejected once, we got rejected twice, and after that we got rejected 3 times, and at the same time market, it went higher than 50 EMA and it started to hold higher than 50 EMA. So anywhere we place our trade here, put our stop loss just lower than the rejections area, and our target at 1.5 risk reward ratio is the best trade opportunity you will ever get. And look how smooth the market went up towards our target. And that is why I said only target 1.5 risk reward ratio. You can see that this time market never went towards our higher high area. Instead, it just reversed from some level and it started dropping to the downside. So it is always recommended to put your target at 1.5 risk reward ratio. So now so far we have seen 2 trade examples. Now let's see one more trade example so you can understand it even better. So here is the last example of US30 scalping strategy. We have this strong support and resistance level right here, and on a 15-minute time frame we broke it to the upside and created this higher high area. When we created this higher high area, we know that we have made a very strong movement to the upside. We broke this level of resistance which previously acted as a support as well, and we have a new higher high here. So we need to confirm it using our 2 exponential moving averages, 50 EMA and 200 EMA. So we are going to add both of them, and we can clearly see that after we broke this resistance level to the upside, 50 EMA also went higher than 200 EMA. So it means that we have the confirmed buy trend. So what we need to do, we need to go down to 5-minute time frame to look for the pullback and to wait for the market to give us a trade opportunity. So now let's move down to 5-minute time frame. So here we have our 5-minute time frame, and we are going to get rid of our 200 exponential moving average because we do not need it on 5-minute time frame. From this high area, the market started to make a pullback towards our resistance which we broke to the upside. When it was coming down, market also started to stay lower than 50 EMA, which is a great thing. We were making lower lows and lower highs, lower lows and lower highs, and after some time, yes, we have made a very strong movement to the downside during the pullback, but we are still above than our resistance area from a 15-minute time frame. So when market it reached towards that level of resistance, we made a spot here, we got rejected. But when we got rejected, we were also lower than our 50 EMA. So we need to wait for the market to first go higher than our 50 EMA, and at the same time, it has to stay at this resistance area, and we also need at least one more rejection. So what happened? We got one more rejection, and after that, market went higher than our 50 EMA. When it went higher than our 50 EMA, we can place our trade from here as well. It's fine, we can place our trade at this level because we have at least 2 rejections at that resistance, which then became support on 5-minute, and the market it also went higher than our 50 EMA. So anywhere we place our trade here, put our stop loss just lower than our rejections area on a 5-minute time frame, and our target at 1.5 risk reward is a very nice trade opportunity. As you can see, the market it even went for the 3rd rejection here, but it's fine absolutely, because right after that, when we could not lower than this support level which was previously acting as a resistance from the 15-minute time frame, the market it got rejected the 3rd time. It went higher than our 50 EMA after that, and it started to go up. So it's as simple as that. And this is how you can use this simple US30 strategy to trade on the 5-minute time frames every single day to make money in the market. Now in just 2 to 3 days, we got at least 3 opportunities using this strategy. We first had our sell opportunity from here, and then we had our buy opportunity from here, and then we had our buy opportunity from here as well. This is how we can use it for our advantage using just 4 steps. First, we need to identify the break of support and resistance on 15-minute time frame. Then we will confirm that using 2 exponential moving average, 50 EMA and 200 EMA. We then need to go down to 5-minute time frame, and on our 5-minute time frame, we will wait for the pullback towards our resistance or support level. We will get rid of 200 EMA and we will only focus on 50 EMA to confirm our trade signal. So if you have any question related to this strategy, let me know in the comment section. I will answer to every single one of your comment. And thank you for watching, guys. I will see you in the next video. Bye for now.